So I think last time we had said that we are going to do a question on flexible and fixed budgets. And there are some questions that are listed in the handout. So we go to our past papers, starting with the paper of August 2009. Yeah, it is on page 135. Page 135. The question of August 2009. Question 2C. August 2009. So we are dealing with the question of August 2009, question 2C, and we want to do something known as budgetary control statements. Budgetary control statements. There was on time. It's only Kevin who was here before me. That's why he's So we have what we call details here. We have details. We have fixed budgets, which I want to call C or B. Let me call it C. Then we have what we call actual results. Actual results, we will call them B. So that is how the budgetary control statement is done. So we are through, eh? Okay, so the first thing that you do is to bring the units. Bring the units. So in the original budget, you can see the units are 512,000. 512,000. And the actual results, you can see they are how many? They are 576. 576,000. Now, as I told you last time, the units of the actual are the units of the flexible. I hope your question paper reads that. Eh? Okay, so this one you put 576,000. Yes, the question of XYZ limited. on page 135. Yeah, depending on page. Yeah? You have what? The figures are different. Oh, they are missing. Hey, they are not there. Where is written units sold? Yeah, some papers they are missing. Eh? Yeah. So you can say, the other thing now for the variances, I don't want to talk about variances. That column we shall leave it blank. The day for variances will come. The next thing that we do is called percentage. Percentage. Now, percentage, the original budget is assigned 100%. The original budget is assigned 100%. So what you do is now to tell me if 100% is 512 or if 512 is 100%, what is 576? Convert 576 to percentage. $112.5%. So even here it is 112.5. So what you do from there, you now bring sales revenue. Sales revenue. Now sales revenue, just copy the way it is, 819,000. And here, 856,800. Then you say less cost of sales and this cost of sales we are told they are variable. Cost of sales we are told they are variable. The first one is materials. Materials is 134,400. This is 115,200. Then we have labor. Labor is 192,000. Yeah? Copy now as I'm copying because some have typos. Yours is different from mine, adjust. Then we have overheads. Overheads is 25,600 and 28,800. Then you bring fixed labor costs. Fixed labor costs. Fixed labor cost is 80,000. And this one is 75,200. Then you bring administration costs. Administration costs. Administration costs. Just a minute. Oh, thank you. Tulikuwa kwa administration. So administration, we have the fixed amount. Now the fixed is 147,200. 147,200 and 140,800. 140,800. Then tuko na variable. So the variable is 38,400 and 43,200. Then kuna selling costs. Selling costs, we have the fixed. The fixed is 57,600, 66,400. And then we have the variable, 115,200, 122,400. And then net profit. Net profit is 28,800 and 34,800. 34,800. Haya, sasa the making of the flexible budget is very simple. We already have said that number one, the units of the actual are the units of the flexible. Therefore, or the second thing that we have said is that the units of the original budget are assigned 100%. So I've said the units in the original budget are assigned 100%. The next thing, the third thing is anything that is fixed, it remains as it is in the original budget. So tutaanzia hapa. This fixed here, 57,500, 600, we get hapa. 57,600. That one remains. Put it there. Then this one is also fixed. 147,200. Bring it here. This number here is fixed. Bring it here. So that is how you deal with fixed costs. Anything that is fixed, it remains as it is in the original budget. Now, anything else, it is multiplied by the new percent. You make it the new percent, as in, this one is 100%. So 112% is what? So you simply multiply this by 1.125. So let's start with this one. 819,000 multiplied by 1.125. 921,375. Then multiply this one that 400 multiplied by 1.125. 151,200. We go to the next 192 multiplied by 1.125. 216,000. 25,600 multiplied by 28,800. Tukuja kwa huyu 38,400. 38,400 multiplied by the new percent. 43,200. And finally, this one. 129,600. So with that now get the net profits. That's how simple it is. Now those steps that I have followed, they are explained in your notes. on page 4. Page 4 hapo, the notes, those steps are explained there. Yeah, the 4 bullets that are there. So you have the net profit there. Yeah. So on variances, that one we shall leave it until we get back there, or we get to the topic of variances, so that you'll be able to understand the meanings clearly. Now, the next thing that we need to discuss is called reporting methods. As you can see in your notes, reporting methods. Reporting methods. So in the reporting methods, we are talking of how you report or how you present the results of the activities that have taken place in management accounting and cost accounting departments. And there are 3 main methods that are used. The first one is called absorption costing. The second one is called marginal costing. And the third one is called activity-based costing method. Those are the 3 methods, as you can see there. Now, these 2 methods, they are known as conventional. They are known as conventional, and they are called conventional because they are the methods that have been used since times immemorial. Now, these methods, they differ on how they value products. That's the point of the divergence, how they value products. And when it comes to absorption, they use both fixed and variable to value products. But when it comes to marginal, they just use the variable. Now, these 2 methods, you came across them at your lower levels of management accounting. So here, we shall not go back to them. We are already mentioned. Our focus is on activity-based costing. Now, in also, when you compare this conventional and ABC, there are 2 main things. One, the conventional, they believe that costs are brought about by units. And when they believe that they are brought about by units, sorry, there's someone that Okay, so I was saying they believe that costs are brought about by units. And that means, like now you people, the way you are here, you are the ones who are responsible for the cost in these class. Cost ya stima, cost ya ufagia, cost ya walimu, and so on. But ABC believes that costs are brought about by activities. So they say it is not the students who have brought the cost, but the activities zenye zinafanyika kwa this room. As in like teaching, when I teach there is a cost, when someone comes to clean there is a cost, and so on. The second difference is how they look at cost, the overheads, the fixed. Now these ones, they look at them as a single figure, but these ones, they break them down. They break them down into components, and we see that. And consequently, this conventional, they are said to be inaccurate, but ABC is said to be more accurate. And that's why you can see in one of the write-ups there that in the applications of ABC, it is used to give us accurate costing methods. It gives us accurate pricing methods. It is very good in performance measurement. It is very good in decision making, and so on. When we talk about activities, ABC gives us 4 types of activities. One is called unit level activities. Now, unit level activities are activities that are done for the benefit of just one unit. Like if I start marking your books, that is a unit level activity because I can only mark one book at a time. The second one is called batch level activities. Batch level, those are activities that benefit more than one unit. Like what I am doing here now is a batch level activity because it is benefiting more than one person at the same time. When they come to clean this room, that will be a batch level because they will clean the entire room. They will clean the whole room. The third one is called product sustaining. Now, product sustaining, these are activities that are done to ensure that the product remains competitive in the market, to deal with boredom, to deal with saturation. And these things include packaging. You see, even ourselves, the way we package ourselves, when you the way you dress, it gives you different values. Is that so? Yeah. Is that how you normally stay in the house? Is that how you dress if you're just remaining indoors? Because where you are going, there is a particular value you want to be given. If you are going to the gym, you will not dress the way you are dressed. Still, yeah. If you are if you are going to the village, you will not dress the way you are dressed. If you are going for an interview, you will not dress the same way because value. Yeah. So what we do now with the product, unashida ukibadilisha packaging, and ukibadilisha packaging, then people will be more attracted. The other thing is the design. You change the design of the product. For human beings, we are not able to change our designs. You can't change so much. It is only either you grow big or you grow small. Height here, most of us are married to Mefika Sinipo. Ama you are becoming in a Torah. Yeah? Some? Oh, they breathe their color. Yes, that's still change of packaging or color. Yeah. But design, si kichwa ni ile tu. Uso ni ule tu structure. Now, the only thing they change is the color. Eh? Yeah. And is it good? Or rather, does it give them more value? What do you think? Ufikiri inasaidianga? Huh? Are you sure? Yeah, it's a health hazard in the long run, but in the short run, it helps. Yes, let's even not go very far about bleaching and plastic surgery. For the ladies here, so they do the manicure and pedicure. Hii also inaitwa nini? Those is a powder wanatumia. I normally see them in my house. Yeah. See, they change value. Yes, they don't just go anywhere at namna hiyo venye umeamka tu na uso unaenda tu. At least for men, most of us, hata bei ya vaccine hatujui ni pesa ngapi. We don't care so much, but for the ladies, it matters. Yeah, it matters. So the face value. I was talk about the design. You see something like a phone. Hizi simu zenye tumekuwa tukibadilisha. Most likely, you have not changed the phone because it got lost or it got spoiled. Ni design tu, uliona mtu akifinya simu hivyo ukasema hii hata nitakuwa hiyo. Vitu kama magari. Si vits ni kama tu Probox, ni kama tu Mercedes. Is there much difference? What do you think? Mimi nikikuwa na Kavit na wewe uko na Range Rover, tuambiwe tukipie pale Machakos kuna mkutano. Si hata mimi nitafika na Kavit kangu. So the main purpose of the vehicle is mobility. Na imenitoa hapa ikanifikisha pale. But perception mwenye amedrive Range Rover anakuwa value kama yeye ako juu kuliko mwenye amekuja na Kavit ama mwenye amekuja na Probox. But more or less the same thing. Na hiyo ndio kitu inafanyanga tunashinda tu kubadilisha. The other thing is facility sustaining. Facility sustaining, these activities that we do to ensure that our business remains a going concern. Such would include mergers, at least in politics. Now tumeona hii mambo ya coalition pia Azimio na Kenya Kwanza. The parties that did not merge, they are nowhere to be seen. Lakini what happened? Watu waliungana, wale walienda Azimio, wale walienda Kenya Kwanza. Now kila mtu anaonekana. Yeah, when you merge and you acquire, you become visible. But if you remain alone later, you cannot continue far. It's just like even in our human race, marriage is a form of a merger and acquisition. When we get married, does that give us a future going concern? Yeah? Is it a factor to consider? Yeah, it's a serious factor. When we don't see young men and women getting married, it's a serious concern because it shows that our future is a bit threatened. But when we see people hooking up and getting married, it shows that there is what? There is hope. Janet is excited. Yeah, it's a serious thing. It's a serious thing. Issues to do with painting. Just like what I've said about the oil that we apply to ourselves. Naona venye kumepakwa rangi hapa. Hii ukuta ikiachiliwa hivi ikae for like 10 years. Ama ichapwe na matope na mauchafu zingine. You come here and you don't feel like this is a good school. It's a good place. Sindio? But sasa wakipaka rangi vizuri hivyo, you see like it's brand new. You feel this is where I belong. So those things are very, very important. As far as sustaining the activity, the business are concerned. Good. Now we have been given some advantages. I think I had mentioned them earlier. Factors that lead to the that have led to the growth of APC. One of them is obviously the accuracy. They have been deemed to be very accurate. The other thing is increased automation. There is much use of machines to do office work. There is also the use of or the issue of diversification. There is also the issue of competition. When you face competition, have you ever faced competition in your life? You don't have to be a business person to face competition. As long as you're a social person, you have this friend, this boyfriend or this girlfriend. Inafika mahali naona fulani kama analeta compare. So when you sense there is competition, you just stay like that. Not unless you are really hoping that this person gets out of your life. So ukiona kuna mtu mwingine anaangalia na macho fulani, you say good readers. But if you are serious with the person or with the item of competition, you don't just sit back. You start gathering more what information. Hapo ndio unapatanga mtu sasa anataka kuchukua simu ya mwenzake, anaangalia akiacha tu hapo kwa meza, anaangalia haraka ni nani alipiga, nani alipigiwa, pesa ilienda ama ilitoka wapi. Unaangalia kwa Facebook nani alicomment kwa post yao, alisema nini, nani anamfuata, those kind of things. Yeah. So that you are able to know whether there is what competition. I don't know whether these days people do that, do these things. You have this girlfriend. Let me use the girlfriend. And meachana hapa town. Sasa anaenda kwao na wewe unaenda. So after 10 minutes, because you suspect kuna mahali anaweza kuwa amepitia, nampigia simu. Umepata gari? Umefika wapi? Lakini si mambo na gari anamefika wapi. Unataka kusikiza kama kuna mtu mwingine hapo kando anaongea. Hata akifika kwa nyumba unapiga na unaleta irrelevant stories, just trying to buy time to hear whether there is someone who can talk or cough, alafu muulize nani huyo hapo kwa background. Those things happen. No, you are looking at me as if in a different world. Anyway, where I live, those things happen. Maybe where you live, they don't happen. But all what I wanted to illustrate is when there is a competition, you must go for information. Yeah. Otherwise, you'll be defeated. And you go for it in the unaona kama hii clip kanasemekana kanilika ka deputy president. If it is true, let's assume it is true. I want to say let's assume, and I hope no one mistakes me on politics. Let's assume it's true. If it is true, then the people who are in his house in Karen, he thought they are his friends. But sasa hapo kuna mtu mwenye anamchukua what he's saying so that apeleke the other side. Now that is a big credit to the other side because they have managed to get information. So when you are in competition, you must get information, you must be accurate. And that is what APC does. So I think with that, we are going to take a small break for prayers and then come back to handle a question. Yeah. So I want us to go to this question of December 2000, question 5B. December 2000, question 5B. need to avoid double work, I can design it in a way that we can do very many things. So I've said December 2000. December 2000, question 5B. So we have the cost pool. We have the cost driver. We have the overhead absorption rate. Then we have cost unit of product. So this one is equals to budget costs divided by budget cost driver. That gives us what we are calling OAR, overhead absorption rate. We have three products. We have product P, product Q, and product R. Practice that one, help us to avoid double work. Pange tu kwa page, hivyo utakosea. if you look at your handout, you'll be able to see those steps, just like tumepanga hapa. The first step is to identify the activities in the company. Then you group them into common groups, which are called cost pools. Then you identify the cost driver. Then you compute the OER, and then you charge the product. So basically, that is what we have done. So the examiner here has already classified for us. So tutaanza na machining. Machining. Now in machining, we are already guided that we are supposed to use machine hours. Supposed to use machine hours. We are supposed to use machine hours. So what we are going to do, is you can see the number of units that have been produced. And if you turn to the other page, you can see where we have machine hours. So I want you to multiply those machine hours by the number of units. Like for the first one, that's 12,000 times a half. So now you are half. When you turn to the other table, plus 16,000 times 1, plus 8,000 times 1.5. What is the answer? I'm saying you can see where we have the units. It is 12,000 times. Maybe I can change this one so that you see. I have the cost here. The cost is 1,000. So this one is what I want to divide with the machine hours. And the machine hours, I'm saying, the units are 12,000 for the first product. Multiplied by, if you turn to the other page, it is a half. So that is 0.5. Plus the second product, Q, has 16,000 units. Multiplied by the machine hours are 1. Plus the second or the third one has 8,000 units. And it has 1.5 machine hours. So give me that. Now divide 1 or 2 by that. 3. So this is 3 shillings per hour. It's good you even note per machine hour. Per machine hour. So if it is per machine hour, what you do in charging, you can see product P, it has 0.5 hours. So unasema ni 3 times 0.5. That gives us 1 point what? 5. This other one is 3 times 1. That gives us 3. And this gives us 3 times 1.5. That gives us 4.5. That's the cost per unit of each product. You now take the next cost pool, production scheduling. Let's look at production scheduling. Production scheduling. Now, production scheduling, it is also driven by machine hours. By driver, we mean what makes that cost change. What makes that cost change is machine hours. And the cost there is 84,000. So 84,000, we will divide by that 4,000 because now we already have computed. You already have computed. $2.47. So 2.47 per machine hour. Per machine hour. So here, utasema ni 2.47 multiplied by 0.5. By 0.5, we get what? 1.235. Hapa 2.47 multiplied by 1 is 2.47. 2.47 multiplied by 1.5. 3.705. Haya, tuende kwa huyo mwingine anaitwa setup costs. Setup costs. Now the setup cost, it is driven by production runs. It is driven by production runs. So what you can see, the cost is 54,000. So this 54,000, we are going to divide by, you can see if you turn to the other page, the production runs are 6, 16, and 8. So 6 plus 16 plus 8, those are the production runs. $1,800. Now this 1,800, it is per production run. Per production run. Per production run. So if you are looking for 1 unit, what you do, unachukua these 1,800, you multiply by how many runs there are, which are 6, and then you divide by the costs, rather the units. Let me divide by the units. You divide by the units. This one has 12,000. $0.9. You do the same thing here. 1,800 multiplied by 16. You divide by 16,000. Divide by 16,000. 1.8. Then we have 1,800 multiplied by 8. Divide by 8,000. 1.8 as well. Haya, huyo mwingine anaitwa quality control. Quality control. Now, quality control, we are using production runs again. Production runs again. So the cost is 49,200. We divide by this is 30. The production runs are 30. $1,640 per production run. $1,640 per production run. So we do the same thing. That will be 1,640 multiplied by 6. You divide by 12,000. $0.82. 1,640 multiplied by 16. You divide by 16,000. 1.64. And 1,640 multiplied by 8. You divide by 8,000. 1.64 again. 1.64. The next is receiving materials. Receiving of materials. Now, receiving of materials, we have components receipts. Components receipts. Now, in this one, the amount involved is 64,800. You divide by the component receipts. Tunaambiwa 18,864. 18,864. Those are the component receipts. So when you factor them, you get what? 400 per receipt. It is 400 per receipt. 400 per receipt. So, sasa huyu atakuwa 400 times 18. You divide by 12,000. $0.6. 400 times 80. You divide by 16,000. Two. 400 times 64. You divide by 8,000. 3.2. The last one is packing materials. Packing materials, we're using customer orders. Customer orders. So in using customer orders, the cost is 36,000. So 36,000 you divide by the orders are 620.10. 6 plus 20 plus 10. That gives us 1,000 per order. 1,000 per order. So if you argue the same way, you say 1,000 times 6, you divide by 12,000. Hmm? 0.5. 1,000 times 20, you divide by 16,000. 1.25. 1,000 times 10, you divide by 8,000. 1.25. So that is how you compute the cost per unit using the activity-based. If it was the conventional, conventional wangetumia the total. Naona hiyo 390 ni just divide by badala hii kazi yote kama ni conventional wangefanya hivi. Wangechukua tu hiyo 390,000 you divide by, for example, the machine hours of that 4. Although we are not recording. $11.47. Sasa hiyo 11.47 you una multiply na these machine hours. And that's all. So conventional is very fast. But as we said, it is not very accurate. So ABC, you can see it has broken down. So there is a lot of work that is involved. So in the process, you become more accurate and you even get a better understanding. So the question had asked us to get there. Using the activity, you get the gross profit per unit. You get the gross profit. So let's draw the income statement. Pick income statement. Income statement. So in the income statement, we have details. We have product B. We have product Q and product R. So we are through, eh? So if we are through, you will begin with a selling price. Selling price, you say less material costs, labor costs, then that will give us the contribution. Then you less overhead costs. Overhead cost ni hizi tu tumekuwa nazo. Ya kwanza ni machining. The next one is production. The next one is setup. The next one is quality. The next one is receiving. The last one is packing. That now gives you the net profit or unit profit. Total units, and then total profit. So hizo vitu zote tuko nazo. So you can see the kina selling price na material. Hizi zingine za like hii packing hii utaweka 0.5, 1.25, 1.25. Huyu mwingine ni 0.6, huyu mwingine ni 2, huyu mwingine ni 3.2. Selling price umepewa 50, 70, 60. 50, 70, 60. Material ni 16, 24, 20. 16, 24, 20. Labor ni 8, 12, 8. 8, 12, 8. Total units, hizi unajua, they were 12,000. Hii ingine ni 16,000. Na hapa ni 8,000. So finish up that. So we already do it. So you can attempt the other questions that have been suggested, and that is the concept. That's the concept behind that. The next thing that we are supposed to discuss is how now to prepare budgets that are based on activities. And exactly what we have done here is what is done with activity-based budgeting. You are able to know, like now for machining, hizo cost tulikuwa tumetumia hapa, you are able to tell us, machining, we are going to use this amount of money, production is this amount of money, and so on. So that bit that is given there as the cost pool and the cost, that is what we call activity-based budgeting. And the other thing that we need to look at is how do you do a flexible budget when you are given activities as the main determinant of the cost. Main determinant of costs. If you look at our notes, there is that discussion of activity-based costing, and I've already said it is where we use activities as opposed to units. So I would suggest you look at the question that is suggested there. There are several questions I've suggested, so that we can look at the question that is given there as question number 1 on page 7. Why we need to use activity-based, or how you can do the activity-based budgeting and a flexible budget. The question reads that HW PLC is a food processing company, produces high quality cooked meals for the retail market. The 5 different types of meals that the company produces, A to E, are made by subjecting ingredients to a series of processing activities. The meals are different and therefore need differing amounts of processing activities. Budget and actual information for October 2014 is shown below. So we are given that the budgeted cost, all costs are expected to be variable in relation to the number of processing activities. We are given the actual data and that, the processing costs. Now prepare a budgetary control statement that shows the original budget cost, flexible budgets, the actual cost, and the variances. So again, I want us to draw a budgetary control statement. Budgetary control statement, which is now based on activities. Budgetary control statement. And this is activity-based budgeting. It's activity-based budgeting. So in the activity-based, I will have the details here, a column for details. We'll have activities, then amounts. Activities, then amounts. Activities, and then amount. Now this one for the last one here. We can make it a little bit wider, though not very wide. Here we show about for the flexible. This is flexible budget. Flexible budget. This is actual results. And this is fixed budget. Now remember, fixed budget is the original budget. When you hear of the fixed budget, we are simply talking of the about the original budget. We are simply talking of the original budget. Okay, so if we are through, unlike the other one which we have, tulikuwa tumeweka units here na percent, I want to do it without the percentages, which is still the same thing. Still the same thing. For the activity W, this is what we are going to do. You can see the number of batches. I don't know whether I can be able to write all of them. So maybe I can illustrate the first. If you look at the first table there, budgeted data, you can see the batches for W. It will be 20 times 4 plus 30 times 5 plus 15 times 2 plus 40 times 3 plus 25 times 1. Have you seen those values? Yeah. So they're giving us what? $405. When I come to activity X, I argue the same way. 20 times 3 plus 30 times 5 plus 15 times 2. 30 times 2 plus 15 times 5 plus 40 times 1 plus 25 times 4. $335. When I come to Y, it is 20 times 3 plus 30 times 3 plus 15 times 2 plus 40 times 4 plus 25 times 2. $390. Then Z, it is 20 times 4 plus 30 times 6 plus 15 times 8 plus 40 times 2 plus 25 times 3. $555. $535. If you add those activities, 405 plus 335 plus 390 plus 535. $1665. The amount, if I use the thousands, let me use the amount in thousands. So W has 160, this one has 130, this one has 80, and this one has 200. $570. We go to the actual. So the actual, what we shall do, ukiangalia hapo chini, utakuwa unatumia those units that are there, or rather those batches. So tutasema 18 times 4 plus 33 times 5 plus 16 times 2 plus 35 times 3 plus 28 times 1. So my space is a bit squeezed, but now you have understood what we are doing. So sasa unatumia hizo actuals. So multiply ukipea answers. Umesema ni ngapi? 402. Huyo mwingine 353 52. That's 9. Five, 2. And then the costs are 158, 139, 73, 206. That difference. Which one?
Why?
Why? 381. Confirmed? 381. Remember what we did with the other one, eh? For us to get the percentage, I think it was 576 and 512. See, 576 divided by 512, you need to pay 12.5%. Alafu hiyo percent ndio tulikuwa sasa tuna multiply with the cost. So that is exactly what I want us to do. Here 576 was the actual. Here 576 was the actual. In other words, what I'm saying is, these actual activities are the ones that will go to the flexible. So hapa kwanza weka 402, hapa weka 352, hapa 381, and hapa 552. When you want to convert them to percentages, unachukua the actual which is 402, you divide by the budget, the original, 5405. Now multiply by the cost of the original, 160. Then hapa uchukue 352. You divide by hii kwa 335. Multiplied by the cost of 130. Kuja hapa uchukue 381. You divide by 390. Multiplied by the cost of 80. Hapa chukua 552. You divide by 535. Multiplied by the cost original 200. That's all. It's the same thing. It is also, look here, it is also the same approach to the activity based of getting the OER fast. If you get this 160, you divide by 405. That will give you the OER. Then you multiply the actual. Multiply. So they are one and the same thing. One and the same thing. Go through? Yeah, so that is how you go about it. That is good. Now, the next area of concern is called standard costing. And standard costing is simply the use of standard costs. And standard costs are predetermined costs. They are costs that should be achieved under efficient conditions of operations. So this method is based on standards. There are three types of standards. Number one is called basic standards. These are standards that remain effective for a long period of time. They don't keep on changing. Like, for example, what we used to have that a year has 2 semesters. That was a basic standard. It remained for a long period of time. Then sasa imebadilika, tukaambiwa the year now has 3 semesters. So those ones now will most likely become the basic standards, such that you can even use them now to predict. Naweza jipanga, for example, kama ndio unaanza sec 1, useme now by this time I will have finished. So they are called basic. Then we have what we call ideal standards. These are standards that should be achieved under efficient conditions of operations, and they don't create room for normal allowances. Like this class, I'm supposed to be here by 6 and leave at 8. So according to the ideal, exactly by 6, I should be here. Exactly by 8, I should leave. Not anything earlier, not anything later. Now, when you use those ones to judge performance, they demotivate workers because they are rarely achieved. So what we use is what we call currently attainable. Currently attainable is what we hope that it is the best, but we appreciate there could be normal disruptions. I may have wanted to come to class on time, but on the way I am stopped by someone who I could not ignore. So I end up coming to class late. I may have wanted to leave the class on time, but maybe nimemaliza swali mapema ama nimechelewa. So I extend kidogo or I leave a little bit earlier. So those are the practicals, the realities. That's what we call the achievables. Now, the steps that are used, we set the standard. Like now we have set our standard. The class should begin at 6 and end at 8. That's our standard. Then we measure the actual. There should be someone who is recording the time I'm coming, the time I'm leaving. Then later on, we compare the differences between the two. And the difference is what we call variance. That could either be good or bad. We'll be discussing a lot in that. And then you investigate why the variances came about. And obviously now you take appropriate action after discovering why the variances came about. Some advantages are we are able to control the cost. We get information that is more useful, is more reasonable, and then there is cost savings and possible reductions in production cost. But some few problems with this are, number one, it is a bit tedious, it is expensive, it is time consuming. You'll see the computations that you'll be doing, they are not things that you want to make your cup of tea every now and then. Controls the operating part of the organization only, and they ignore the other items like quality, lead time, service, customer, and so on. So when we use these standards, we kind of become more bureaucratic. We ignore issues to do with quality. You see, like now, a few minutes when we were writing, someone would really see that there is teaching that is taking place because kuna kitu inaandikwa. But right now that I'm talking, no one can see what is happening. If you look at the last 2 minutes, there is no evidence that I have been talking. There's no evidence that I've been teaching. Yeah. So if we just want to be so much quantity oriented, we are likely to lose out on some other aspects that are qualitative. And those qualitatives are more important. Those are the times you hear students saying, si kufanya maswali mingi na tuelewi, afadhali ufanye moja na tuelewe. Lakini mtu ako quantity oriented, anataka mimi nichape maswali 5. Ndio wakienda nyumbani kama mzazi anaangalia what you have done, then anaona kuna kazi mingi sana imefanywa. But ukiulizwa ujifanyia hata kamoja, hakuna kuelewa. So those are things. I'm not in any way saying that nilikuwa nafanya kaswali kamoja in the guys that the quality was so high. That's also not very good. What you're saying is that there should be a balance. The other thing is it's not very useful in modern factories where just-in-time principles are adopted. We are using JIT. It's not applicable in small farms. Not very many small companies can afford to do this. And it's not very effective in situations where what we are doing is not standardized. So basically, that is the introduction to variances. I just wanted to mention that so that when we meet tomorrow, God willing, in my sub 2 should be good. So we stop at that point and we pick up from there tomorrow. Thank you.